Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Hopefully everybody doing well. Just got up from a little nappy nap. Little nappy nap. Y'all bear with me while I get myself together. Where did I put my water? Now hold on. Oh, there it is right there. It was under the desk. Good evening, everybody. If it's your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you don't hablo español. And this is another episode of the Intraday Price Action Recap, being brought to you by Smart Money Manuscript. Yep. That's my course that I got. Created a course called Smart Money Manuscript. First link in the description below. If you want a one-stop shop for everything that you need for, learning about the stock market, trading, investing, all that. Buy the best thing going, $69.99. Also, this Saturday at 12 p.m. is our monthly Q&A session within the Smart Money Manuscript. Yeah, no extra charge. You get monthly Q&A sessions with the creator. No extra charge. Ask your specific, detailed questions to the creator. Where else can you do that at? For that price point, nowhere. Don't go spend $15,000 for mentorships, $10,000 for mentorships. Don't spend hundreds and hundreds of dollars per month for discords. Right? There you go. All you need. The full layout of everything you need is right there in the Smart Money Manuscript. You don't even need the monthly Q&As with me. You got everything you need right there. 19 videos, 19 quizzes. Right? Teach everything from the basics to the most advanced. Even covers and detail the ICT concepts. Everything you need to know right there. Do yourself a favor. Click that first link in the description below and spend the best $69.99 you've ever spent in your life. Yep. He's selling the course. Y'all better watch him. He's a scammer. He's selling courses. Who we got in here? Whoa. Calio got the scary picture up the other day. Are you smoking a cigar? Calio, I didn't know who that was for a second. That's Calio with the, but what are they? I'm used to just seeing a C up there or something. I don't know. A picture I ain't never. I think I might have seen that one time before. I think it scared me last time too. Empire Traders hanging out with Mike Pitts fly again. We got Marco up in here. We got Even Better Me. Even Better You. Man, what's going on? Even Better Me. We got Here to Learn and Share. I got my live chat on. If y'all ain't know, Here to Learn and Share is a spam bot YouTube channel. And the algorithm blocks all of I was gonna say her comments, but it's a spam bot channel. So I don't know if it's a her or him that's running this spam bot channel, but it like my YouTube channel automatically blocks everything that channel writes, unless I have to go in and like set something over here just so I can see it. But I see cheating commented at 442. Kim cheating commented at 449. Shout out Sean Valentine. Hola. What's going on, Valentine? Hola, Sean Valentine. For commenting. First one to comment at 601. I salute you with both hands. What's going on, Felicia? I ain't seen you in the month of Sundays. I ain't seen you since yesterday. How you doing? How you doing? Yep, I see more numbers than I see names, but them all the names that I see. So that's all I'm going to say. Hey, hey. What the crying face for? What's the crying face for, spam bot channel? Why is there a crying face? Now, hold on for a second. I'm trying to fix something. All right. It said spammed you because you actually engage. Man, this AI getting crazy. AI know how to respond. I'm glad you're doing good, Felicia. AI know how to respond to me in real time. The AI spam bot channel said it spammed me because I actually engaged. That's amazing. Question: did Price do anything today that caught you off guard? Did Price do something that made you say, "Hey, why did it do that?" Were you expecting Price to do one thing and it did something totally different? Hmm? If so, let me know in the chat. I'm not going to drop the Zoom link in the chat because I don't want no crank yankers to come up. Right. Last time I was trying to do that, crank yankers pulled up and was you know, spam. Who know how to stream? Who know how to live stream on TikTok? when I was on like the other platform I was using, it like started letting me live stream on YouTube and TikTok at the same time. How can you live stream on TikTok? Do y'all know? Like it was letting me do it like through the thing. Can I do it through Zoom? What it? What it? Join. Timotheus. Timothy. Where you at? How do you live stream on TikTok?
I don't know. I've never done that. You probably just open app and press live stream.
I know this old platform I used to use. They used to let me like just like simulcast with YouTube and TikTok at the same time, and then it stopped doing it when they did the ban on TikTok.
Yeah, I don't know about the computer, but if you want to just stream it, you just open your phone.
Yeah, no.
I've never live streamed on TikTok.
Yeah, the other one it was like it let me do it on the computer, and I could like share my screen and everything. And then when they did the ban, it stopped working, and then it didn't start working no more. And then I ain't never think about it no more. All right, appreciate you. Don't forget I need to get Chris tomorrow.
Yeah, I'll get you.
Yeah. What in the world is that? Oh. All right, y'all. If my teenage don't know, there's no hope for me. So I take it that everybody knew exactly what Price was going to do today. And so, hey, we'll drive on. We'll keep driving on. Over here, if you pay attention, right over here, that area. Stop looking at me. Look there. We got the Charty Tarts up there. Let me open up my so I don't block anything on the charts. Let me see what that look like. Yeah, I don't want to make sure I ain't blocking nothing. Right. Got the Charty Tarts up there. Yeah, okay. That's good there. Open up the little sidebar there so I don't block off any part of the chart. Turn over fancy dancy. We're looking at an hourly chart right here. Okay. If we zoom way out like this right here, right? We zoom way out like this. We can see, excuse me, what we was talking about the other day. We said that there's liquidity resting down here, right? We have relative equal lows there. All right, this is your low. That's a relative equal low, right? There's a liquidity pool resting right down here. There's money swimming around down here in this pool. Okay. All right. Price seems to be drawing down there. Okay. Price seems to be drawing there. We're still in the midst of a market maker sell model, still in the midst of a sell program. Right. We spoke about that just here recently. Talk about how we came down to a discount PD array on the higher time frame. And then we started a buy program here moving back up. All right. So in this little area here, it was in between the tail of two cities where we had a short-term buy program and a short-term sell program on the intraday time frame, right? And said inside this area here, nothing is really high probability because you could form longs and you could form shorts in the same area. Okay. So now we've came down, boop, and what do? We've extended, right? the sell program, right? Broke out of that low there. We've extended the sell program. So the sell program proves to have prevailed in this area right here. Okay. Now, as we stated before, that right there is the liquidity pool that's resting below price. Right? Does it have to get there? No, it don't. Right? So what do you want to do? You want to identify, are there reasons for the higher time frames to go there? Right? So when we go to a weekly chart and look at our liquidity pool right there. Right? We have a weekly order block right there. If you come over here and we look at the mean threshold of that order block, right? The mean threshold of that order block is resting right down there, smack dab inside that liquidity pool. All right. Tim, why are you just looking at the bodies? When I'm looking at my higher time frames, I like to do body to body, especially if we have staggering wicks, right? See how we got a teeny wick there and a long wick on the top, right? That's just telling me it was some manipulation happening up there, right? So I like to look at like the beef, the crux of the matter, right? I like to look at the beefy part of the candle. Say that's what it is, right? Now, there's absolutely nothing wrong if you want to look at the entire candle, right? Because technically that is mean threshold of the entire week. But I just like to look at the candle bodies itself when there's like weird things going on with the wicks. If it's extremely large wick, or if it's the wicks aren't the same size, they're not evenly spaced. If it was a little tiny wick on the top and a tiny wick on the bottom, I wouldn't cry over, I wouldn't nitpick over that, and I'll just include the wicks. Okay. So on the weekly, right, there's a reason to come down there. Why? Because we have a discount PD array there. All right. Got a discount PD array. When we look at this latest expansion here on the weekly time frame, right? Discount PD array there. All right, yeah. Okay. On the monthly time frame, okay. Looking at the monthly time frame, yeah, nothing to write home to mom about. Only thing down there is a discount wick, right? We got a discount wick down there. And if we look at the discount wick on the monthly time frame, right? Consequent encroachment just toward the bottom of the pool. And if we put it into the fourth grade, right, coming down to that upper quadrant, or consequent encroachment will bring us right down there to that liquidity pool, right? Right, will bring us right down there to that liquidity pool. So higher time frame wise, yes, on the monthly, we still haven't had a significant pullback yet, right? Will we have a significant pullback in November? Who knows? November time frame, November, December, typically bullish times, So will it go against the grain and be like a very bearish November? Who knows? Who cares? Right? But those are the higher time frame PD rays in that area. Reasons for the higher time frame to draw down there. So, right, we go back to our daily time frame. All right. That right there is the liquidity pool right there, taking out internal liquidity, right? And still not having, right, a full structure break, right? because this right here, we're breaking outside of the structure, right? Coming down, taking out internal liquidity, right? And we're not breaking, bearish, right? We're just coming down, taking out internal liquidity for a possibility to go back up, right? Or you can, fool everybody. Come down, take it out, come down, just get a good pullback, right? Get a good pullback on the monthly time frame. Who cares what it does, right? Why? Because we're just going to trade what we see. We're just going to trade what we see. Okay. So just looking at reasons for, does the algorithm have a reason to come down there to that sell side liquidity that is there? And yes, it does. It has a reason to come down there based off the higher time frame. Now, we have come down and repriced the imbalance here on the electronic trading hours, right? I mean, liquidity void, same thing, imbalance. Then we look at the regular trading hours. We have repriced both liquidity voids, right? You got a liquidity void here, regular trading hours. We repriced that today. And we had a liquidity void here, regular trading hours. We repriced that yesterday. Okay. So up here, right, we've offered sell side delivery and buy side delivery within this range. And then we cut out of there, right? And we came down, offered sell side delivery, right? Offered sell side delivery, buy side delivery, but this is on the intraday time frame, right? So now looking at the daily chart, right? Looking at the daily chart, right? This is the area where that upper one is, right? We've offered sell side delivery and buy side delivery in that area on the daily chart, right? And then yesterday we wicked down, and then today we traded down, right? So we've done a lot of efficient delivery in this area here, right? Is that what the algorithm was reaching for? Coming to reprice those liquidity voids? Who knows? Who knows? Right? Again, we're here at a bullish order block. All right. What are we watching for? To see if this bullish order block does its job. All right. How can we get any kind of details of if the algorithm really wants to come down here into this liquidity pool right here? All right. How does it trade at this bullish order block? Right. Body to body, haven't made it to mean threshold. Came down into the first down close candle. Right. Well, we actually made it into the last one, right? Then today we traded down into it again, right? If we look at the entire area, right, we're far from there. But like I said, I like to look at my body to body. Okay. And also, we still have not made it to the inversion fair value gap. Right. These are the things that are designed to act as support. These areas are designed. That close 87.25, 87.75. Okay, no gap there.
All right. These areas here are designed to act as support, right? That order block, that inversion fair value gap, right? Then even this breaker, right? This breaker right here. Okay. And if we're looking at the breaker, all this stuff like this here, see how the wicks are nice proportion right there. I'll take the entire thing, right? If we look there, come right down, very close. What's that mean threshold? 195.50, right? And we came down to 197.75, right? Two and a quarter ticks. I mean, 2.25 points away from that breaker mean threshold. Right. So this is all the stuff you're watching. Hey, does this stuff support price? Right. These are the daily PD arrays that are designed to send price back up to that high right there. Right. Because here we're consolidating. Right. We're expanding. Now we're retracing. Right. Now that we got that retrace, we've come to an area that's designed, this right here, that breaker, that inversion fair value gap, that order block, right? All of that's designed to send price back up to that high right there. Okay. So you're watching how does daily candles close in respect to that bullish order block right there. All right. This bullish breaker, this inversion fair value gap, that right there, they're the supporting cast to that bullish order block right there. Okay. So we're looking to see how does price react here. Okay. Remember, wicks do the damage, bodies tell the story. All right. So we're looking for how does bodies close in respect to these PD arrays. Have I hammered that home enough? Do we get it? Do we get it? Okay. All right. Because people always be like, Tim, I just struggle with seeing it in real time. Tim, I just struggle. You see it in real time. You just want it to happen really fast. You want it to happen really fast. You think it's like something secret to like seeing it. There's nothing secret to seeing it, right? You have to just grow to trust the process, right? You have to just grow to trust the process. Just like this morning when we was on the, I guess you could say kind of like a pop-up tape reading stream, because when I did a pre-market analysis, we just stayed on until like 11 o'clock or so, maybe later, right? And we was talking about, hey, if we're selling off, if you're a scalper, right, you can scalp for a long within this little range right here. If you buy it here, right, you want to just take it back to here, don't force it past that. And as we was talking, where it went to the fair value gap, it went exact to the exact spot we were saying you don't want to force it beyond, then it turned around and started falling again, right? And I'm pretty sure while we was talking it through, it was crystal clear. You could see it like nothing else. But when you're sitting there by yourself in front of your charts, right, you're second guessing yourself. You don't trust that you know what you're seeing. You think like Tim is some guru and he got special glasses where when he put his glasses on, he can see the market in a different light. Like, oh, now I can see through the candles like Ant-Man. No, these glasses don't do that. All right. You just have to learn to trust the process. Y'all think I just know it's going to do that 100%. No, that's why I have stop losses, because I may be getting in too early. I may get caught up in some manipulation. Does it negate the concepts? No. Does it mean I don't know what I'm doing because I get stopped out? No. Right. Then if I get stopped out, I just got to go back and see, hey, why did I get stopped out? Oh, I got in too early. it was coming up on the macro time, and I didn't let the manipulation happen first. Oh, I just, I put my stop loss too tight. Instead of putting it at the swing low, I put it at the bottom of the candle, and it went down the consequent encroachment of the wick, or dug into like the halfway point of the rejection blocking it. Uh, I should have known that, right? That's all it'd be. That's all it'd be. Learn to trust your analysis. All right. So now we see where the liquidity rests, where the money resides, right? Now we see what's there to run interference, right? Breaker, order block, inversion fair value gap, right? Looking to see, does this run interference send us back up, right? Or do we continue to eat down to the liquidity that the market appears to be drawing toward, right? Now we know what's in the way. We know what's designed to stop us. We know what's our opposition. So now we can go accordingly. And then when we look at our range, right? When we look at our range, our 20-day look back, right? We can see we right in the middle of the road for our 20-day look back, right? We're right there in the middle of the road. And then ways that you can tell that you're in sync with the algorithm is because when you look at where your middle of the road is, you should be able to look to the left and see times when the algorithm spent time there consolidating. That's how you know, yes, I'm in sync with the algorithm, because back here, the algorithm here and here, the algorithm saw this area as a place of fair value. So I can be confident that I have my fib anchored on the right, high, and low, right? Because the algorithm spent time near consolidating, spent time near consolidating. And where does the algorithm tend to consolidate? At equilibrium, right? Okay. Okay. Now that we know what the algorithm seems to be drawn toward, now that we know who our opposition is, the breaker, the order block, and the inversion fair value gap, right? You know that we came to equilibrium, right? Well, first of all, we got below the upper quadrant, used it as resistance, dropped down to equilibrium, went back to the upper quadrant, dropped down below equilibrium. Now, right, we got below equilibrium. So now we will anticipate price, how we traded up into this discount wick today, right? First of all, we traded up to consequent encroachment of yesterday's premium daily wick, and then dropped down below equilibrium. Then we retrace back up to consequent encroachment of the discount wick. Did I say discount wick or premium wick up here? Anyway, premium wick, in case I didn't. Then we dropped the consequent encroachment of the discount wick, right? And then now, since we have come below the equilibrium, right, for the sale program that we're in, you would want to see price come down toward that lower quadrant. Okay. You want to see it come to that lower quadrant. And when it get to that lower quadrant, where is that? That's down there taking that liquidity, right? And for the bullish aspect of this range, you want to see price find support here and then go back up, right? Take the liquidity, find support at your lower quadrant, and then go back up, right? Why is that? From the upper quadrant to the lower quadrant, is where we're looking to place all of our trading opportunities. All right. Inside this area right here. This is where we're looking to do the bulk of our trading inside of any range. All right. This is where your cream de la cream setups are going to be coming inside that area right there. Okay. Okay. All right. Now that we've beat that horse to death, let's look at what price did today. Hourly time frame. All right. Hourly time frame. We opened up here, came up to the lower quadrant of yesterday's premium wick, dropped down, took out sell side liquidity. Right. So we opened, traded away from the open, right? Took out some liquidity, crossed over the new day opening gap, took out some liquidity, right? And then got a setup to come back to the new day opening gap, dropped down again after midnight, left that low intact, went back up, took out buy side, traded up into consequent encroachment, got a nice rejection, right? And going into the New York morning session, died off for the entire first hour, came down below the high of the discount wick, right?
Yeah, what kind of news made it drop like that today?
No news. It just
Oh, that was a macro or something?
just cutting through all of this efficient delivered price.
Okay.
Right. Just cut through all of this. All of this is efficiently delivered. Sell
What's that
side
first big red candle? 11? What time is that?
9 o'clock.
9? Oh, okay.
Yeah, this is the 9 o'clock hourly counter. This is inside. This is the New York Open happens at 9:30. All right. So died off. This little pop back up to the high of that discount wick. This is the little area right here. What we was talking about this morning. If you're a scalper, right, price is very bearish. But if you're a scalper, right, and there was a buying opportunity right inside here, right, and you would only want to take it, and it was an area just before the high of this, where we said you don't want to force it past that. And we went to the high of the candle, then we died off again, came all the way down almost to the low of the wick. I said the candle, but the wick. Okay. Then once we died off there at 10 o'clock, 11, from 11, 12, 1, we just stayed there hovering in between, right? We took out the sell side, traded back up to the lower quadrant, right? Poked up into the SIBI, dropped back down, didn't take the sell side, traded up to consequent encroachment into that bearish mitigation block over there, right? Dropped back down, right? Below that daily low again, didn't take the sell side, and then closed off the day by trading back up into the range of that 3 p.m. candle and finished off the day right there, right? So it was just like one fell swoop from 9 o'clock to 11 o'clock. So the 9 o'clock hour, 10 o'clock hour, it was just selling down. And then the rest of the day, it just kind of hung out there, right? And that's kind of typical for price action, right? You'll get a big move and then price will cool off, right? And that's another thing when it comes to being patient, because when we see price moving, right, we'd be like, man, I want to participate. But then it'll get to a point and then it cool off on you and you end up getting chopped up in this right here, because you're expecting it to rally back up or you're expecting it to continue down. But it then came down here, did something, and now it's just cooling off. And it's starting to engineer liquidity. And guess what? You are that liquidity, right? 15-minute time frame. All right. Looking at a little bit more detail. Okay. So this is our yesterday's daily range right there. Right. Right now, we're just looking at the premium wick and discount wick, right? We're just looking at the premium wick and discount wick levels, right? Same thing we was looking at before. We see how we interacted with those on the 15-minute time frame. Okay. Just watching these quadrants here, right? We see as we went up, right? There's a SIBI resting right here, right? That SIBI is right there in between that lower quadrant and that consequent encroachment right there, right? When we come up to it the first time, we hit it, drop down. We come up to it the second time, just kind of consolidate around the low of that SIBI at that quadrant, right? Then we trade up to the high of the SIBI, and then we poke up into that SIBI right there. When it came down, it just kissed that quadrant, but we trade up into that SIBI right there, and then we drop down. We die off, come all the way down to consequent encroachment of the lower wick, right? And then when we trade back up, right, where's that SIBI right there resting? Right there on that quadrant of that lower wick, right? Not only is that SIBI resting right there on that quadrant of that lower wick, right? We look over here, right? And we got a bearish breaker that's resting right there on that quadrant of that lower wick, right? And we drop down, then we create a bearish order block, right? This bearish order block, it spans across the upper quadrant and the consequent encroachment, right? When we, after we come all the way down here, handle this and go to choppity chop chop slopping, right? What do? We trade back up to that consequent encroachment and stop right there at that bearish order block, right? That's left right there at that consequent encroachment, right? And not only that, but we come over here, we got a bearish breaker that's resting right there on that consequent encroachment right there, right? Right there. So even though we're just looking at the lower wick and the upper wick, right? The algorithm has key PD rays placed at these key quadrant levels. All right. Key quadrant levels. No, you can't go thinking nothing wrong. Who's gonna drive you home tonight? Discount wick. Okay. All right. 20-day look back. Okay. All right. Looking at our daily range. All right. This is our daily range. Lowest low, highest high from yesterday. All right. Algorithm has given us a nice dealing range based off of time, right? We talk about this all the time. Nice dealing range based off of time, right? So we anchor that there to there. We're not doing it because we did it here. We're doing it because this algorithmic dealing range is giving us places to look in the future, right? It's giving us nice quadrant levels to look at in the future, okay? Now, when we come over here, just like this, right? We open up here, right? We're trading back and forth throughout there, right? Let's peep out what's going on. Look at it in some detail, right? We come here, we trade away from the open right there, right? Into that imbalance, crossover, take out a sell side, right? When we trade up, right, and going above that high there's some liquidity on the lower time frame, some liquidity on this time frame and the lower time frame. So we trade away, take liquidity, cross over, take liquidity. When we cross over and take liquidity, there's a SIBI. Where's that SIBI resting? Right there on that upper quadrant of the day. daily range. Drop down, right? Go up, hit that upper quadrant inside that SIBI, right? Then we drop back down, right? Set relative equal lows, right? So coming off of that SIBI, come down, set relative equal lows. Okay. Trade back up here. Stop at the quadrant again, right there, right? Place an order block right there on that quadrant, right? Right here, we place the order block on the quadrant there. Once we offer that price there, now that's an order block. It's on that quadrant, right? We open up here, trade down into the wick of that order block. Where is it on that quadrant? Go up here, take out buy side liquidity, hang out there, right? We get us a nice pop up here at 8:30, right? We had talked about this earlier. We talked about this when we was on the stream. We said that price had been slightly bullish, right? But we was in a sale program and we've been consolidating and we've already popped up and took out buy side right there. Popped up, took out buy side. So watching this 930 drop to see if this is going to act as a manipulation, right? But since we've already consolidated and taken out buy side, right? You don't want to try to force the manipulation and be bullish. You just want to trade what you see, right? And if the 930 drop is not manipulation, you just want to accept it and wait till price forms new structure, right? Forms new structure to look for opportunities to short in, right? Right here, came down, set a high, then now it broke down lower, right? And there it is right there, just like what we talked about in the AM, right? This is very deep to be trying to short off of. So what you want to do, wait for it to form new structure. And when we got down here, I said price is showing capitulation right here. It's showing, hey, this is, we're accepting these new lower prices now. We're not going back up there. Okay, talked about all of that. Then we got to push back up into that SIBI, and then we drop down. Okay. All right. So once we came here, what did we do? Cut through all of this right here. This is what we was talking about when Lump asked, right? All of this is very efficiently delivered. Sell side delivery, buy side delivery, whole bunch of consolidation, and then just cut through it like butter, right? All this is just straight down, no kind of way. And then we get right there at that lower quadrant, pause for a second, trade back up, then drop down to the low of the range, right? And then go into chop slot mode, right? So whenever we comes to a balanced price range, if you're above it and you're bearish, what do you want to see price do? Cut through it like butter. If you're above it and you're bullish, you want to see price use it as support, right? In this case, what do? We cut through it like butter, all right? Cut through it like butter and extended the bearish dealing range, right? So now you continue to look for places that it can be drawn to. And we said the liquidity was down here that it appears to be drawn toward, right? So you're still looking for opportunities to sell in the premium until the sale program is invalidated, right? Until the sale program is invalidated. And now we're in this is a deep sale program, right? Very deep sale program. And we haven't come to the liquidity pool yet. So yes, it would take a very long time to invalidate this sale program. But with all of this efficient delivery, right, you really would not want to see price coming back up in this area right here. That's extremely high resistance just to come back down here to this liquidity here. because the algorithm has sliced through this. It's showing you, hey, this is, I'm in a hurry to get through this, right? This is very efficiently delivered. I'm trying to get through this. Whew, gone.
So
Right?
we on the right side of a sell model right now.
Yes.
Okay.
Yes. On the right side of a market maker sell model. And this is the liquidity here. Right. This is
Yeah,
the
I can see it once you, how you say squanch, once you squanched it
yeah.
up.
Yeah. Squanch it
Once
up.
you did that, yeah, I couldn't see it when it was spread it out, because
Yeah.
I ain't got my chart marked up like that.
Yeah. So we haven't reached the liquidity. Right. And like I always stress, you don't have to get to the liquidity on the lower time frame when there's higher time frame discount PD arrays. You see what I'm saying? Now, if the higher time frame discount PD arrays were down here, you would insist that we hit that liquidity, right? Because the higher time frame discount PD arrays are below the liquidity. But when the higher time frame discount PD arrays are above the intraday liquidity, you have to see if price shows a willingness to get there, because these higher time frame PD arrays are designed to support price. And here's the gag. These are daily PD arrays. So intraday, we can still come down here and take that liquidity, and the higher time frame can respect these PD arrays as far as not invalidate their bullishness, because the wicks do the damage and the bodies tell the story. So we can wick through all of this on the intraday time frame, take that liquidity, and still close above these PD arrays that's designed to support price. Right.
And the algorithm programmed to sweep liquidity like that a lot of times.
All the time. It's
Yeah,
programmed is programmed to sweep liquidity and rebalance the market, right? And as we saw on the regular trading hours, right, we've offered sell side delivery here. Like we got a gap, right? And we've offered sell side delivery. We're coming down, right? Just on like a daily time frame basis, we're coming down. And we saw when we look at daily candles, this like candle here, let's go. It ain't gonna stay on regular trading hours, but if I put it on daily, right? As we see there inside that area there, right? For this liquidity void right here, right? We've offered sell side and buy side in this area right here. So this right here is efficiently delivered, and we left that area. So right now, this is a balanced area right here for that liquidity void there. And then on the daily chart, right, you can't see the other liquidity void that's here, because that's on the intraday time frame where that void is. You know what I'm saying? Like if I go back
it
down,
was on the hour or 15, the void.
hour and 15 minutes, I think
Well,
was on
yeah,
the,
of course, anything
see,
that's lower.
yes, intraday. So see, this is where that was, because I can't put the daily on regular trading hours, because it's just showing you the candle for the futures.
Yeah,
You see what I'm
okay.
saying? Like if you want to see that, I would have to go over to like the SPX. Like if I come over here to the SPX, right, and then put it on daily candles like that. See, now you can see it, because it don't have any there's no extended hours for the SPX. All right. So right, you got that liquidity void there. You got that liquidity void there on the SPX. And now the SPX, we have come down into the inversion fair value gap on the SPX, right? We're down here deep inside of the bullish order block, right? So we on the SPX, we've come to these daily PD arrays on the SPX, right? Because the SPX only trades during certain times of the day. You see what I'm saying? But the NQ, it trades 23 hours a day. So the daily candles are going to look different. You know what I'm saying? During for like if I go to like to intraday and if I go to intraday, see it looks like the NQ when I put it on regular trading hours. You see what I'm saying? Because this is what, like if the NQ didn't have like extended, let me come over here. Matter of fact, let me do this right here. Oh man. Oh, yes, it will. Okay. Right. See, all right. Put the NQ on regular trading hours and then the SPX. All right. See, they look the same. All right. Because the NQ got trade 23 hours a day. So when I look at electronic trading now, when I look at the daily calendar, it's going to show me the daily calendar because there's no such thing as regular trading hours for the NQ on the daily level. But if I go intraday and put on regular trading hours, then it'll only show me the trading from 9:30 to 4, just like the SPX, right? The SPX, it go from like 9:30 to 4. So this is that's why they look, you know what I'm saying, very similar, because it's like they, and this right here, I think it's got like an extra 15 minutes, but when you look at them, they doing the same thing. You see what I'm saying?
Yeah, they pretty much looking the same.
Yeah. You know, got the same gaps, you know what I'm saying? Trade in the same, all of that, you know, because they are, this is the futures for, and this is the cash account for the S&P 500. This is the futures for the S&P 500. And then the SPY is the ETF for the S&P 500. So it's all the same asset, if you will, but different instruments. It's different instruments of the same asset. All right.
With the same 500, right?
Yeah, the same companies. The S&P 500, the same 500 companies. Right. One is like I say, one is just a cash account. One is these are futures, and the other one is an ETF, but they all tracking the S&P 500. All right. Now let me get my stuff back in line like it's supposed to be. I ain't gonna be just keep getting you this good game like this right here on Algo's internet.
Hey man, we gotta ask them questions. That's when you oops up and give it to us.
Keep getting up a good game like this on Algo's internet like this. You know what I'm saying? Okay, so all right, so now we see that the sale program is still intact. You know what I'm saying? It's still showing bearishness. So you will be looking for reasons to sell in the premium until proven wrong. You know what I'm saying? Like we say, we got a long way to go until this sale program is invalidated, right? We have come to the order block, but we have not come to the inversion fair value gap, right? We haven't interacted with inversion fair value gap. So we still have, you know what I'm saying, daily discount PD arrays that we can come to. The the sale program has been extended, right? When we traded below this low, we invalidated this short-term buy program that we had came into, right? We was watching these relative equal highs, looking to see if the buy program wanted to continue up and take them out, right? But the heaviness continued, right? And what do? We came below the quadrant, right, into this quadrant, explored below it, didn't even have the strength to get back to it. Oh, that's what I was saying, right? I left off there, right? Where is that SIBI? resting right there on that equilibrium, right? Once we explored below the lower quadrant, we traded back up into that SIBI that's resting on that quadrant. What do we say when price is exceedingly bearish, right? We want to see it hit it and quit it, right? So we come down, stop just short of consequent encroachment, come back out, close, totally respecting it, trade up, touch the low of it, and drop again, right? Boom, boom. Institutional order flow, entry drill. Didn't even reprice all the way up to the upper half of it, right? If price is super bearish, you want that upper half not be touched at all. Can wicks go up there? Yes, they can, right? But on a closing basis, you want to see it closing below that consequent encroachment, right? Even if a wick comes all the way up here, if the bodies are closing below that consequent encroachment, that's still respecting that PDA rate. But if it's really bearish, like how we took off today, like that, you don't want to see it digging all back up to the upper half of that fair value gap. You want to see it touch it and go, preferably touching that lower quadrant and going, right? But you want to see it touch it and go, okay? Resting right there on that quadrant. Remember when we was looking at the upper wick and the lower wick, what was it doing? It was leaving key PD arrays at quadrants, right? What is it doing here? We got a SIBI right there at a quadrant. We never traded back to it, right? But we got a SIBI right there at a quadrant, right? We got a SIBI right there at a quadrant. We got a bearish order block and a SIBI right there at a quadrant, right? The algorithm is when you run your fibs to a algorithmic dealing range, the algorithm is going to place PD arrays at these quadrants to be used at its discretion, right? This SIBI right here, right? Did that SIBI get used on this time frame? Nah, it didn't, right? It ain't get used on this time frame, right? But who cares? You know what I'm saying? Who cares? It's just a breakaway gap. There's no trading opportunity at that point on this time frame. Did this SIBI get used on that time frame? Yes, it did. Right? There's a trading opportunity on this time frame right there. Right? And we was talking earlier today. What we say? We're deep in a discount, right? You want to see price form new structure before looking for a reason to short. Right? Well, Tim, how can I have shorted that? Right? How could I have shorted that? You can short it by when we trade up into this right here and you see that rejection there, right? When that close, when this candle open, you can short right there, right? That's a technique I use all the time. I wait for the confirmation of respecting this, right? We trade it up. Nice rejection off of that right there. Now you got minimum risk. Now, because if you short when it just trades back into this, like when this candle here open, now your risk is all the way up there. Potential risk is all the way up there. Why? That's the swing high where this rests, right? Your required mandatory stop. Now, if you do it based off Michael's teachings, right, your required stop is the high of that first candle, right? The high of that first candle is your mandatory stop for a fair value gap. Me, myself, I always say my mandatory stop is the low of the BISI or SIB, that the high of the SIBI candle, right? Which is the candle number 2. But the way Michael teaches is your mandatory stop is the high of the first candle in a SIBI or the low of the first candle in the BISI, right? So if it's a BISI, you're putting it at, so you got candle 1, 2, 3, right? It's all the way at the end of the entire candle structure, right? Right. So that's your mandatory stop up there. But if you let it respect this first and drop back down, now if you enter as soon as this candle closes, now you can put your risk here, right? Why do you put your risk there? Because we've gone up and shown that we're respecting that consequent encroachment. So now we should not violate that wick, right? So you can put your stop there. That's your safe stop now. And if you're aggressive, you can put it above consequent encroachment of the wick, but you don't want to try to be Superman and put it above consequent. That's the aggressive stop. We always want to look at our mandatory stops, right? So now you got far less risk because you waited for that to prove that it was going to stop price, right? All right. That's just different entry techniques. People always say, "Damn, I can see it, damn, but I don't know how do I enter, man? I'll be trying to figure out how to enter. Can you just tell me how to enter so I can make some money?" There you go. There you go. Got to do it for the lazy people. Put it out there for you. No extra charge. Yeah, I think that's it, man. We see how price place PD arrays based off of the wicks of the daily candle, and we see how price placed PD arrays based off of our daily range. Remember what we always say about the day that the candles, the algorithm is giving you a algorithmic range based off of time. A weekly candle, a daily candle, an hourly candle, any candle that's an algorithmic dispensation of time. The algorithm understands that. So if you're trading within the confines of this is my daily range, as you see, the algorithm is doing very specific things at these quadrant levels. Mm, mm, mm.
So Tim, you know how last month you went over like seasonality
Nope.
from the macroeconomic macroeconomic point of view, since we've been going up for 8 months since April. I guess it is, well, who knows what's going on with the economy. But yeah, we just have to watch the market. I won't ask for the crystal ball.
No, go ahead. I ain't gonna break out the crystal ball on you. What's your question?
No. I was just thinking, I guess we're anticipating this retracement or whatever in the month of November. Overall.
Well, actually, since November is, let's go look at seasonality. What did I just hit? I don't know what I just hit. Hopefully I didn't mess anything up. Right. So let's look at the seasonality of the Qs. Right. Since we're looking at the NASDAQ. For those who don't know, you can go to stockcharts.com, right? And then come up here and click on the little where's the snowflake? Right here, the snowflake that says seasonality. Then put your ticker symbol in there. We already got the Qs in there. Hit enter, right? And then I found this out before. You can adjust how much time you want to look at, right? If you look 10 years, 15 years back, 10 years back. So it's going to be, this is showing you the last 9 years of data, because this year, right? Well, for November, for October all the way to January, it's the last 10 years because those months have passed already. But for October, this is the last 9 years of data, and it's real time calculating what we're doing right now for November. Okay. So as we see over the last 10 years, right, there's an 80% chance that November will close higher than it opened. And over the last 10 years, there's an average return of 3.8%, right? Last 15 years, y'all see the numbers, right? 80%, 3%. Last 20 years, 70%, 1.9%, right? And that's as far back as I can take it. Okay. So now looking at the last 5 years, 80% chance, and it's a little bit more skewed because we know 2020, 2021, the market was just going skyrocketing, right? So it's a little bit more skewed in the more recent history, like average of 4% return over the last 4 years, because again, this year hasn't happened yet. Okay. So if you're anticipating a bullish month, right? What would be healthy algorithmic price in the beginning of that month? A pullback, right? And so right now it's November the 6th, right? And we're in the midst of a pullback. We're in the midst of a retracement. Okay. So if we anticipate it to end bullish, right, we want to see it pull back. We want to see it sweep some liquidity, because if you want to buy, you want to see it manipulate some sell side and then rally. Right. So right now it's playing into the narrative of November being a bullish month. Right. Will that play out? We don't know. But seasonality wise, right, we're in a primarily bullish month, right? And then December over the last 5 years is typically flat, right? So it's like we be getting like the Santa Claus rally from November going into December, and then December starts to pull back. You know what I'm saying? Profit taking at the end of the year, if you will, right? Because when we go back, you see the numbers on December, flat, 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 like flat to negative, right? Basically flat, right? And then over, you know, basically there's one where it was very high. And what is that? That's 2 years back. So that's 2023, 2024, right? Add in 2022, add in 2021, add in 2020. You know what I'm saying? So it's like when we had that little run up after 2020 when price was just going up, right? When his last 2 years, 100% chance of closing, 3% return when the market was just flying, right? But again, we're going into a bullish season. We get in a retracement in the beginning, because when you think about a bullish candle, right? When you think about a bullish candle, when you think about the bullish power of 3, you want to see it open. You want to see it manipulate sell side. You want to see it rally, take out buy side, and close at or near the high. That's a bullish power of 3 candle. And right now we're opening and we're going down, right? So now we want to see it manipulate some sell side, then rally, take out some buy side, and close at or near the high of that time period. Okay. So based off seasonality, we're right in line with what you would anticipate a bullish month to be. Does it stay the course? We don't know. We don't freaking care. Right. We don't know. We don't care. But all we can do is just watch to see what the algorithm offers us and trade what we see. All right. Because again, we're, like you said, we treetop tall. If I go to a monthly chart right now on the NQ, treetop tall from April, right? 7 months straight up. 1, 2, 3, 4, 5, 6, 7, right? 7 months straight up. Straight just way super extended. Stuff so expensive up here right now. I don't understand why anybody's buying anything long-term wise. You know what I'm saying? I don't understand why anybody buying anything long-term wise. Because boy, look at him. The market is treetop tall. Now, it might be, individual companies that it's good buys out there, because it's, it's always a good buy somewhere. But just looking at the market overall, right? I wouldn't be trying to buy the market overall for like long term, right? Unless you just dollar cost averaging in like I do with my kids. I think that's all I got, man. We highlighted some key things as far as algorithmic signatures in price today. We've been touching on these same things. Y'all notice, right? I get on a little series where I'm showing you something over and over and over and over and over, right? Trying to help it stick in your mind, right? Trying to help it stick in your mind, trying to build those stacks on stacks, blocks on blocks, all right? Because one of these days, Daddy Bird might not show up. One of these days, Daddy Bird might be naked on the beach in Tahiti. And y'all be like, where Tim at? Where Ronnie your grande at? That boy should be gone. That boy gonna be gone. Y'all be like, man, Tim just disappeared. Tim pulled the ICT. That boy just went radio silent. You gonna be ready for that, Yolanda? You ready for that, Marco?
I'm ready. We gonna be ready because we're gonna get the gold with you, but we're gonna go on the one where they got close.
I'm gonna be naked on the beach in Tahiti, so y'all are gonna be with me. I'll be out there frolicking. Huevos out. You gonna be ready for that, Marco? You ready for that, Calio? When Big Spider disappear?
I don't want to hear that story, man. Not with your Weibos out.
Big that boy got the BBs, got the big balls out. Hey man, I appreciate y'all for hanging out with me, man. I seen somebody say welcome somebody. I'm sorry, I ain't see you. Welcome, whoever that is. Tyreek. Is that Tyreek? I'm assuming that's Tyreek. Welcome, Tyreek. I apologize for not seeing you there. If this is your first time tuning in to Tim's Tidbits, hopefully you got something out of this, man. If you didn't, I promise you, I'll try my best next time to help you figure out something. Right? It's always something to learn when it comes to reading this price action. It's a lot of things dealing with the ICT concepts, right? It's not easy, but it's not hard either, right? We complicate it by overthinking it, right? As y'all see, it's very simple, right? Figure out the algorithmic dealing range and look for trading opportunities at key price points, right? Time is king. Yes, sir. Always good hearing the tidbits. Okay, so you ain't new here. You've been here before. I appreciate you for tapping back in, man. Shout out Tyreek for pulling back up. Man, Tyreek, I ain't seen you month of Sundays, man. I forgot that was you. You look different, man. You done changed something about yourself. All right, then. Good to see you, man. Hey, all right, Steve. I appreciate you. Hey, man, shout out Sam B for pulling up yesterday with the hard-hitting questions, man. I feel like we went crazy yesterday. I feel like today was a good one, but yesterday we went crazy. Oh, man. We was on one yesterday, cooking with both pots. Right, cook with both pots. What's that stuff? That thing my wife be on TikTok trying to do like the young kids, doing something like this right here. My sons hate that. Whenever they see their mom on TikTok she be doing something like, they be like, "Oh my God, mom, stop doing that. You too old to be doing that." And I look at her, I be like, what's wrong with she? They be like, no, man, she can't do it. I'm like, she did, all she did was, they like, no, you can't. And she did so, she'll do a song, talk about some, she'll talk some take me through there, talk about some Lululemon. They was like, oh my God, well, don't never do that again. Don't post nothing like that again. Yes, Venus, last night. You missed last night? Uh-oh, somebody missed last night. I'm gonna go take the video down. You gotta be here, man. You know what? I'm gonna make that a rule. I'm gonna make that a rule. If we get the cooking on a live stream, I'm taking it down. It's one of the things where you got to be there. You got to be there to experience it. You remember back in the day before we had like social media and stuff where you could just go back and rewatch it and stuff like that right there, or on demand, when we just had regular TV and you see something, you see a show, it'd be so good. And you'd be like, man, that was so good. I wish I could watch that again. But you can't on demand it. You can't rewind it and all. You can't do none of that. You just get what you get. One shot, one kill. That's what I'm gonna start doing. Whew. Man, those were the days. Hey man, I'm about to get out of here. Wait a minute. Wait a minute. Wait a minute. Who in the world is Sexy Caramel? It's somebody in the gang. Who done changed their name to Sexy Caramel? Talk to somebody can't keep playing hook from the gym. Who is Sexy? Is that E-Rock? That better not. I knew it was E-Rock. I knew it was E-Rock. I just said E-Rock. That better not be you. It was E-Rock. I said, what did I say? I said, I was about to say E-Rock if that's you. And then they typed in E-Rock. I knew it was you. I knew it was you. E-Rock over there talking, take me through there. Lululemon. Hey man. Hey man. I appreciate y'all for hanging out with me. Hey, like I said, if this is first time tuning in, I appreciate it. Hit the like button. Share this with somebody who you think could get something out of it. Right. Tomorrow, I'm not gonna be doing a live stream tomorrow evening. Right. So for those that's in the Smart Money Manuscript, I'll see y'all Saturday at 12 p.m. Eastern Standard Time. If you haven't purchased the Smart Money Manuscript, I advise you do so. Very I think it's a nice asset to have when it comes to just solidifying those fundamental things that you need from the basics through the advanced stuff. It gives you like a solid foundation, and then you get an opportunity to have a monthly Q&A session with me every second Saturday at 12 p.m. Eastern Standard Time. And our monthly Q&A is going to be this Saturday at on November the 8th at 12 p.m. Right? Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy D. Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you don't hablo Espanol. Y'all be safe. I ain't these trading streets, man. I'm gone.